Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Thanks, Marty. And how about YouTube? All right, thanks, everybody. Well, good morning. This is the last stream for 2024. Thank you all so much for being part of the Trader Lab and for visiting the Trader Lab here on YouTube. This stream is about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. The Trader Lab is a community of like-minded traders who've come together to leverage their collective experience. Trader Lab is about understanding how the market works, why it does what it does, and how at times you can get in alignment with it. The other part of the Trader Lab is understanding really what is the business of trading, how might you navigate the market, how does it work, and how might you extract a statistical edge to actually create a potential trading business or career. And while past performance is never indicative of future results, and everybody has to kind of find their groove, if you will, or what fits them psychologically, there are processes you can use that might help you along your way. And of course, you need to do the work, but the purpose of Trader Lab is to help traders actually do that work if they do it and understand what the reality of the business of trading is, not what we tend to imagine it to be. And you're all invited to Trader Lab. There's no cost and it's available to everybody. Thanks, Stephen. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. If you're interested in more of what you see here, and this is really a broad stroke of what trading process is and structured trades, you're all invited to the Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube. And of course, there is no cost for this. Now, there's a couple other little announcements. Bookmap currently has a end of year sale going on, and I would be remiss if I didn't point this out to you because it is, first of all, unprecedented as far as I'm aware. First of all, we have what's called the 50% off for the first month of the MBO bundle. That's market by order. These are the actual stamped orders that come from the CME, and that means market by order. So is it a limit? Is it a stop? Is it an iceberg? And inside of Bookmap, there's an add-on called the MBO bundle. And with that, you can actually see in the order flow which orders are active where, how many stops go off at a location, how many icebergs. Are iceberg orders canceled? What's going on in there? And there's a lot more. What about stops? And there's more. So there's a lot to this in the sense of how you might enhance your insight. And this one, 50% off the first month, and that ends tonight. So you've been kind of thinking about it, kicking it around, and you are a current subscriber or even going to be a new subscriber, you might want to consider taking this. It's on a month-to-month basis, and you can get 50% off. Check that out. Now, here's the other one that I think, if you've ever been thinking about Bookmap, this is the one. You can get 30% off Global Plus annual subscription. That's a significant savings. And that Global Plus is all the bells and whistles. It's everything other than any specific add-ons you want. The MBO bundle is an add-on, and you can also save on that one if you take action on that one today. This one ends on January 2nd. So this to me is, well, all I can say is I wish I had this option when I purchased my Bookmap in 2015. So you guys are lucky. That's all I can say. If you want a high tier order flow tool, I would suggest you go to bookmap.com, deals, read all the specifics about it, educate yourself. And then if it makes sense, as they say, act accordingly. That's all I can say about that. But I think it's really useful. So what do we have here? This is the higher time frame. Higher time frame, let's just say intermediate time frame. This is the FOMC avalanche. I call it the Acapulco cliff dive. This was the next inside day. Here we had the day where we got sellers following through, tested this low, and then the market came up. Now, this is yesterday's trade. Now, this was very interesting. Look at this candle, how we have a wick bottom, top, pretty much in the middle. Now, that in and of itself says two sides are active, and then we have to ask ourselves, well, what's next, right? Now, I want to point a couple levels out to you, and then we'll move on. Actually, there's three things I want to point out. Primary level, 59.80. Write that one down. 59.60. Write that one down. And what you're going to see here is this is called a microcomposite high volume node. And this is where there was a lot of volume transacted. This orange line is called the microcomposite volume point of control. In other words, the highest volume in this whole thing, this whole consolidation, intermediate time frame. So what's important about this is if this shifts higher up here, then possibly this is too low. And this now is the retail price. When we come down here in auction, then this becomes too high. And now this is the new retail price. So what the market is doing, it's auctioning, it's trying to figure out what's too high, what's too low. You'll notice that we have not yet filled this gap. So that's one piece of information that is suggesting maybe this is too high. That doesn't mean, though, we won't trade inside of this range. So today, the idea initially coming in, was to trade inside this range and potentially take out, and this is in the morning, take out this high because there's shorts in here. So for me, it was longs primarily in the morning. So for me, it was just chip shots, you might say long trades, until it changes. If it changes, then I have to change with it or I stand aside. That's what trade plan is about. So let's remember 59.60, 59.80, and then possibly up to 60-ish. So that was the first situation. Now, the other part of this is if I get below 60, other than testing it, then it can take me lower. I can then get down into 45-ish. I can get down in the 30s. I can even, whatever, take out this low because we were looking for it to take out this high. Didn't do it. Well, if the market won't take out the high, maybe it'll take out the low, or maybe it'll stay inside and have an inside day. Now, we opened higher inside of yesterday's range. Here's a couple of things for you to consider. There's over an 80% probability that we're going to take out either the previous high or low. That's why initially I was going for this high, okay? And so statistically, I'm leaning to the north side. There's almost a 68% probability I'm going to take out the first hour's high. That's another reason I'm leaning toward the north side. I have a 67% I'm going to take out the previous point of control. That point of control, let me show it to you. And this is all the reason for the longs, okay? Now, what happens from there happens, But let's take a look. Where is that point of control? It's right there. So, and then yesterday's high, or I should say ETH high, is a high probability. What was that when you're asking me? 69% probability. And then yesterday's high, this, right? I lost it. Hold on. %81 probability. Past performance not indicative of future results. You got to bet these. So that sets me up coming in for a long orientation. I want to explain that to you because the idea is to get in alignment and to use probabilities then to try to create alignment and know levels. These are all auction based. Now, the other thing to remember about trading is that we are in a narration process. In other words, it's doing whatever it's doing, and as long as it's sort of going the direction that, and it's not violating levels, we're going to try to stay in alignment. However, there's another part to this, and that is what happens when it changes alignment. And then what do you do about that? Either you get in alignment with it or you don't trade. You go, what's going on? So for me, I just keep trading as long as I perceive, in a direction, I should say, as long as I perceive it's in alignment with my plan. If it transitions, then I'm going to change to the plan that is in alignment with the current transition or change. If it changes back, I change again. And the other part of it is I can be zigging and the market can zag. In other words, it could be in a certain condition. I have structured trades that are in alignment with the condition. I put the trade on, and then the market changes its condition while I'm in the trade. What happens? I'll take a stop. Then I have to say, well, did I just have a bad location? Possible. Or because the rotations are random, or is the condition transitioning? Is the context changing? And we only know that in hindsight. So there's these variables that come in, and that's the thing about trading. Trading is not a predictive business. It's really much a contextually defined business, and then it's probabilities. What fits inside the current condition? You'll never know what the next condition will be until it changes. So that's only after the fact. So when you're trading in the present based on what you know. And then you'll find out, and either a trade works or it doesn't. And the other part of it is, and I share this in Trader Lab, is how do you stay in alignment with the market? And how do you recognize change? This is all based on trade plan, because we can't predict what's going to happen. So let's go take a look at the first trade. So for me, my orientation is longs. And remember, I have about, I think, a 70% probability of getting up here. Where's my main levels? 60 and 80, I believe it was, on that higher time frame. Wherever it is. Hold on. I got to get the higher time frame back here. I want to make sure I gave you the right numbers. So 80 and 60. So, and the naked volume point of control is 80. This is the highest retail price from yesterday. ETH high and then north. So there are possibilities here. One is that this is too high. But because of the statistics and the probability, since we're opening higher inside a range, it suggests potentially to go here, go there, and then test yesterday's high. So that's why the first trades are longs. Okay? Then I have support down at 60, and this is my resistance at 80. So 60 and 80. Just want you to remember. This is trade plan, not predicting, just aligning. And I use the term attempting because that's all you can do. So, okay. So let's look at the first trades. So I'm looking for longs. Now, this is the RTH open. It's 8:30 Central Time. By the way, I have to remind you guys, I'm in Costa Rica on a tin can and a string. The internet can go down for no reason. The power can go out for no reason. If it goes out, typically I can come back in about 5 minutes. And if you're in YouTube, just be patient. A new link will pop up and you can continue. Okay? So Let's look. RTH open. So I am looking for longs. And often what happens is the first move down is not the real move. If I get sellers here, I know there's buy stops up here, and I don't know where it's going naturally, right? What do I know? I don't know. I do know that in the ETH, which I cannot show you, we had what's called a double distribution. A double distribution is sort of like you've got all your volume, and then there was another one below, and it's a distribution of volume or an auction. If you break above the lower one, it means potentially we've rejected it. Also, we have something here called the overnight volume point of control. That is the highest volume, and it was in the upper distribution. You can learn all about this in TraderLab. This is a volume point of control from yesterday. So what I know is, at the moment, what's below me is too low. This is a dividing line, so it's like support. This was the retail price or highest volume in the ETH, and this is the highest volume from yesterday's RTH. So what I know is I got an area out here that's support, in other words, too low. I got an area over here that was retail in the ETH, and I got this up here and then out the top. So that's why, and I'm giving you just kind of the reason why, before the market opens, I know I'm going to get on the long side. And this is important if you're in, not only if you're in TraderLab, but as a trader, to anticipate in order to participate. Now, RTH open. Right here, I see a sell sweep. Now, and 640 selling icebergs. So right here, I'm looking to see, do I get buying right here? So I'm looking for buying, and what do I get? I get selling. I'm going, oh, that's nice. Okay, so let's watch. Watch the first trades. Now, the opening trade is complex and because of speed, difficult, to say the least. Let's watch. This is called VPOC migration. And now I'm getting into a structured trade. Now, remember my orientation, and this is not about being right. There is no such thing in trading. The best you have is maybe. Maybe we're going to go up. Okay. So this is now my opening swing low. Here's what I know at the moment. I've come across what was the initial high. These sellers are getting squeezed. I know that. And I know this is where the highest volume is at the moment in the developing RTH time frame. I now know there's more volume up here than there is down here. That might suggest this is too low. I mark it, it's a variable high volume node. What else do I know? I know this right here is micro high volume. And what it is a fractal. Now I'm going to label it, just going to put a little line in here so we don't forget it. And this is the opening swing low, which I already had marked on my chart. It's right there. So I know right now I've got support here, which no way to know until we leave it. So when you get this and you get a little chop, 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 sellers are here, buyers are there. Buyers are here. How do I know buyers are here? Because I got the sellers there and the market went higher. When do I know that? Hindsight. Now, what about here? I got sellers here and I got buyers here. What I don't know is which side is going to win. Consolidation. Here's what I know. Buyers were here. Why? Delta. Why? Sell stops. Why didn't it go down? Passive buyers. This is order flow. And again, I only know there and there. This is too low. This is too low. And now I'm going up. Now I know. Great. Hey, what are you going to do? Now, volume is here. This is too low. So now I'm looking for my long. And I have this as a potential location. And I have this underneath me as too low. So I have a location and I have this. So this is my area to be looking for long here or here, and stops below here. Let's watch. The long is either here. Watch. Notice where we come. Now, when I see things like this, I got to tell you, I have a very mixed reaction to it. One is, that is amazing. The other is, why did you get long here and not there? Isn't that interesting? Here's the answer. Because I don't know it's going to go there. Here's what I know. Let's talk about what we know. I know this is too low at the moment. I know my buyers were here at the moment. And I know my buyers took control here at the moment. I know there's more volume here. This is shopping. If this price was where the highest volume was, in other words, think shopping, and now they raise the price because the buyers and sellers are interacting over here. This is our new retail price. This is how the auction operates. What was too low? That was too low. So this is my first opportunity for a long. It happens to be the mid. And what's most important for me as an auction-based trader is the volume. The midpoint's just 50% between the high and the low. You guys know that, but okay. This is what's the number one input for me. This doesn't have to be here. This could be over here. It doesn't matter. Wherever it is, it is. It is important, but since we're in the open and the market's been open going on 3 minutes, this is my long. So my long is here. My resistance is going to be here, and I'm going for that naked volume point of control, overnight high and yesterday's high. I'm giving you all the reasons for this trade. And before the market opens, I know I'm going to take this trade. What I don't know is where. Isn't that nice? Except I'm looking for my structured trades. The structured trade is this. Here, there, that's the long. However, this is where it fails. Does that make sense? Is everybody tracking? So if I take a long here, my stop has to be out here. And here's the other part of it, just to make your head spin, not to make your head spin, but it could make your head spin. What would happen if I didn't get long here? I'd get long here. If I get long here, my stop's under here. How about if I get long here and I bounce off this? What else might I do? Advanced, add, scale there, or nothing, just hang out. Is everybody with me so far? Just want to make sure we're all together. So this is the first trade in Trader Lab. These are longs. These are trades I take and other traders in Trader Lab who have an edge might take. Now remember, our opening swing low is down here. And where's our target? There. So right here, now this is very interesting. So for me, the long is there, the stop's under there, teeth chatter, did not do anything else here. This is my target right here. And then I'm going for, as I mentioned at the top of the stream, based on my plan, this and this. So that's my trade. Okay. So that was my trade. Now, this gets interesting, of course. I got liquidity sitting here, which I'm aware of. This is called the heat map. And I see us come into the liquidity, but I also see something else that's provides a lot of insight. I see a buy sweep here. I come back and hold this. So far I'm going, I got to clear this to move on to my next level. Okay. So that's what I'm looking for. But this is a sweep. The sweep suggests a counter rotation. Now, when I see the sweep here, I'm anticipating we're going to rotate. So where's my support? It's there and there, right there. So this is still support for me here. So I see the sweep. I pull here and I'm going, well, okay. And then I come back here. My objective is to get through this right there. And not so much. Pull back here, thinking, okay, and this is my support. And the trade gets taken out. Then it's, okay, now what? Well, if the trade gets taken out, now I have to come back here, opening swing low. Here's what the deal is with this. The longs from there and in this leg now are on the hook. Their stops are going to be under here. So there's a couple possibilities. Now I have another level down here, down at 60. When we break this, you can either, and this is subject to plan, right here, this suggests a rotation up. You have your opening swing low here. Now I did not take a short here, but this could be a short. I'm still thinking statistically that I want to be thinking on the long side still at this point. So I'm just moving myself down to a lower location to look for longs. And where is that location? It's down here. So let's watch. Right here, and I discussed this in Trader Lab. So 60, remember what I showed you on the chart? 60 here, 60 and 80. Those are my levels to operate. The idea being is we were going to clear 80 and come up here to, and so in other words, I was trading from 80 over this high. So, that's 10 points. So that's why I was leaning up here, because the statistics suggest over 80% probability to take out either yesterday's high or low. So once we break down, my next level is 60. So let's come back and look at 60. So as a quote trader, my choices are the following. I can get short down to 60, or I can skip the short if I can't get a good location and wait for a long at 60. That's what I did. So for me, this sets up a long. And right in here is where the long is getting set up. So let's look at this, see what it does. And it's coming to here. So this was a long. So for me, what's interesting about trading, guys, is it's really about probabilities and statistics. At least for me it is. I figured out I can't predict anything. So I don't do that anymore. I don't predict. I can't. What I can do is understand how the market works at times, naturally, try to stay in alignment with it, and only take the trades that align with my perception of the current condition of the market, and then put the trades on at the locations that are auction based, like there. So the fact it comes there sets up my long. I'm looking for back to here, mid and VWAP for scale, because right here I could get shorts and that could be the end of it. So it's a long from here to here. Why? There's stops here. If I get through here, my next location is there. Volume point of control. And then I'm looking for it to come across the range and come out the top, get to there, and back on the train towards yesterday's high. So for me, it's longs only still. Watch. And where do we come back? Here. Now, right here, now remember where I was going. Scale, there, out the top. Okay? Now, trade management is another conversation, and that's an individual conversation. Some traders are going to just leave their stops under here. In other words, a trade has to fail before they get out. Other traders are going to manage their trades, and that's up to them. What I do, and I'm not saying this is the best way to do it, it's just what works for me over time, is to trade the targets. So mid and VWAP, up here, developing volume point of control, and then up here in the same trade. I'm just doing it from a different location. So where's our support? Well, where was it too low? Let's put a little line in here, and I'm going to show you narration. So what is this? If we're thinking in auction, in other words, chop, you see the chop, and we all want to shoot ourselves when we see chop because, oh, I got chopped up. Well, yeah, we can get chopped up because the market oscillates and rotates. But what does it say? Let's not think about what's right here, what's going on. Why is the market doing this? Why did it do this? Can we answer that question? Why did it do that? Well, there's sellers here. But what's up here? Buy stops. What's down here? Chop, chop, chop. This is a consolidation. What's going here? Sweeps. I see a sell sweep. I see a buy sweep. I see a sell sweep. I see a sell sweep. When I see sell sweeps, and it's very contested in here, and let me give you the and. I'm at a location. This is the key piece. I'm looking for reversals. I don't know if I'll get them. If you go through a location, then it's going to flip what you use it for. So right here, I am looking for the long, and right here is the volume, and you can see the volume right there. So this is an auction, and an auction is really a consolidation. What goes on in a consolidation? It's passive buyers are here, passive sellers are there. The volume is in the pretty much wherever, and you could see it. It's right there. That's called a high volume node. See it? So this is an auction. I'm not paying that. Yeah, but it's on sale, and we break down here. Now, when it breaks down, I have choices. I can go, well, that's a short, but I have my sweep. When I see my sweep, I'm on alert for a rotation up. And for me, there is no precision with these levels. They're areas. And it's very important you understand in trading. There's no walls. It's not like there's a wall. It's an area. So this has me, teeth chattering because I'm still thinking longs from this area to come back. So that's what I'm thinking, So this sets up a long. Watch. Right? And I'm going here. So, okay, that gives me my long. Now, things change. Watch. This now becomes a variable high volume node because now there's more volume here than there. This now becomes resistance. And my process is generic in the sense of just how I kind of narrate. Because what I'm doing, since I don't use indicators, I'm using the participant interaction, if you will. If this price is too high, the participants aren't going to pay it. But now this is the retail price. There's more volume right here than there was there. Well, if that's too high, it's now resistance. And this is the new retail price. When I fail to get over here, there is trouble. And then I break down here. Now, where's my support? It's right here. So let's see what happens here. Support. Resistance. Support. Resistance. I took another long to here. A long to there. Remember, see where the location is? Now, this is resistance. This is resistance. And then I'm looking for it still to come out the top. Watch. Mad thing, isn't it? And where does it go? Right there. What's my target? Right there. What am I trading? 60 to 80. 60 to 80. 60 to there to 80. Break down this location, to there, or to there, to there. Is everybody tracking? These are the longs. These are the trades. James, where do you find the Trader Lab? The link in the bottom of YouTube, James. There's a link there that says Discord. You do need to register in there, so that keeps the spam out. And you can even download the digital version of Bookmap if you want to play with that a little bit. That's all available. Also, don't forget we have Bookmap has a end of year special going on. 50% off the first month of MBO package and 30% off the annual subscription. If you haven't checked that out, go to bookmap.com. So, deals. So, all longs for me. So I did not take any shorts here. However, you know, what's interesting about trying to figure out what you're going to do in this is you keep doing it until it doesn't work. So for me, the longs were okay, and the statistics are still favoring the long side. So my thing was, if I can clear this, then I got that in yesterday's high. So I'm all good with that. Because if I could get through that, yesterday's high around 92-ish, 93, from here is another 13 points. So that's why I was going up here. So that made a lot of sense to me. So that was my plan. Anyway, it was longs only for me. Now, this is a whole different thing. This is like somebody dropped a bomb on it. And in fact, we call him the bomber. So right here, it was like, what's going on? If you don't think I don't do that, anybody who trades, there's times when something happens, and it could be anything. You know, it can be economic report. It could be somebody trips over the cord at the CME. It could be anything. And it's like, now what? So when this happens, I get taken out of my long, and now I'm sort of the deer in the headlights because now I have conflict. Now, in my trade plan, when I have conflict, I just have to wait. Because my question is, what's going on? What is going on? You know, is this a long? Is this a short? Is it what? So right here, I'm in the clueless zone. So I'm looking at it, and I'm thinking, well, if this is just nonsense, then I'm going to be looking back out around 60 to get back in my trade to come back here and mean revert. So my next trade was out here to come back there. And let's see what happens to it. So this is a long, and the next area is this, and up. Why? I came back to my location. I'm back to my 60, and I can't tell if that bomber, if that was just to shake the tree. You know, I can't tell, so I can't answer the question. What was it other than a bomb? So here's my support. There's my trigger, pullback. Microstructure is right there. If I open this up, you'll see it. And I use fractals, or think Matryoshka dolls. So where is this volume coming from? Let me show it to you. Yeah. So right here, so chop, 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 break high, test. So this is my support right here. And then I come back down, it's support. You can see. And what is it aligned with? Remember, 60. So I'm working 60s to 80s. That's my trade. So I need to get over here. And this is your support. This is your support. Trying to get back. And this is the resistance, okay? So we come up here. As far as I'm concerned, As long as I'm around this area and level, I'm only on the long side at this point. But it changes. When I break here, so what happens for me is I get risk neutral, I get taken out. And now I'm going, well, now I am below 60. And that changes everything around. And this is the first hour's low. Now at this point, I'm below here. So all I'm going to do at this point is take shorts. So we have another structured trade in Trader Lab. It's called the IB continuation trade. Now, once we're under 60, it turns, for me, I want to be short only. So let's try to see if there's a way to get into this thing. The trade is up here. Now, coming through the liquidity down here sets up this becomes, and this is advanced, this becomes a test area. So if we come back here, it's a short right in here. It did not get quite there. It got pretty close, didn't get there. So for me, my trade is here, right up in here. So I see this. Now, here's the thing. I have micro high volume here. This is support. I have my trade up in here. So I want to short this. Support. I want to be shorting up in here. I'm looking for a trigger. I get a trigger here. And my resistance now is there. If I put the trade on, which would be here, my stop needs to be up here. Now, the question becomes, of course, it is within the ballpark. For me, around 3 points is about as much as I want to do, okay? And this is my next level here and then here. So I have a low volume node here. And this now, remember, over 90% probability we take out either the ETH high or low. Well, didn't get the high, didn't get over 80. I'm below 60. Remember, 60 was support. Support becomes resistance. I'm now got my IB continuation trade, which is a structured trade. So now, if this is a trade, and this has to qualify for your individual trade plan, you're going here, and then you're looking for south. You come back here. Now this is where this trade fails. Remember, up above here. So this is a level right here. So that is a zone to come out and check, but this is the next target. So if you got short here, your stop's got to be above here, and this is resistance, high volume area. So let's look at it very carefully together. Micro high volume is here. Can't do anything with this, but I know right here this buyer got thrown under the bus. Passive side is here. And by the way, this is another way I use stop and iceberg detector. Let me show it to you. 18 stops coming up, 3 stops here. I call that stop divergence. It's the only thing I use from indicator world. I don't use any indicators. So I read the order flow and I understand market mechanics. So indicators don't do anything for me. They actually create a problem, conflict, ambiguity, thrashing, and they're looking in the rearview mirror and they're all late. And most of us tend to use indicators to translate market behavior, and quite frankly, I'd rather translate it in real time versus a backwards looking indicator with multiple time frames, and time is not fixed in the market. We tend to fix time, 5 minute, 2 minute, 15, pick one. But the fact is, how long does it take for these participants to vote on a price? Well, if this becomes too high, we're going to leave it. Now I know with stop divergence, only in hindsight, that we ran out of buyers, and these buyers right here, which are the aggressors being the stops, because delta represents initiators and stops because they become market orders. So market orders are aggressors. So stops are market orders, which becomes part of delta. So when I see the buying and it exhausts and I break below it, these guys are under the bus. My other location is this. Here's the volume here. The buyers were above it. This seller and this volume, too low. Watch the fractal. So it's too low here because I broke above it. Having a wonderful day. I get my divergence, no clue. I now break below this. And what else do I break below? This is support. I break below it. I test it from below. It is a short. Where do I test? Back to it. What is it? It's a short. Where'd it come from? There. Where's my stop? Above here. Where's my entry? Right against this volume. Let me show it to you again. This volume. Now, this is called trading in fractals, by the way. This is a fractal. Now, I don't know until that. What am I going to do with that? I can't enter there. But what do I know? I know this is support. And you guys know support, resistance. We've all read the same book on that. Support. Going to the moon. Exhaustion, divergence, break low. Where's resistance? There and here. Where do I short? I can short here with a stop there. If it comes back here, I can short it there. Watch. There. Let's look at this one. Chop, chop, chop. Is that familiar? Too high? Too low? Trigger. Where do I come back? To the volume. Are we going through this? Maybe. I don't know. But I have a statistic that's over 90% probability. Past performance not indicative of future result. Never going to get there. So hopefully we get there before we get here. And if we do, I take a stop. Guess what? We didn't take this out. My stop's above here. Isn't that interesting? You say. Yes, it is. This is Trader Lab. Now what? Well, I got that. Now what? Watch. MCLVN, outside edge, high volume. Where's this volume coming from? Where is it, you're asking me? Let me help you with that. Where is this volume? Where is this volume? Wasn't this support? Isn't that resistance? Isn't that resistance? Isn't that resistance? Isn't this support? Isn't that resistance? Isn't that resistance? Break. Isn't this formerly support, now resistance? Think about it. What do you think? What is this volume in here? Let's look at it. Maybe it's now. Now, right in here, I got resistance. I got support. Resistance. I break below this. What does that tell me? Maybe it's too high. Well, what do we do with that? Maybe it's too high. Let's see. Where do we now? We go through these levels. This becomes support. I have a sweep here. There's more to this. If I have a sweep, I can go the other way. When I get this, I can go the other way. When I get this, I can go the other way. Let's just see. I get this, I can go the other way. I get that, I can go this way. I get that, I can go that way. I get this, I have no clue. I get this coming down, I can reverse. These are sweeps, and you can learn those in Trader Lab and also in the Bookmap Discord server, and all the videos on understanding order flow. Now, we still have let me see, 34. Let's come back and look at the higher time frame. 34 is here. 34, and this is your 80. And this is where we were trading between 60 and 80. So now, if this is too high and 60, which was too low, now becomes resistance, then we're looking to come down to here, 34-ish. And that happens to coincide with that. If I get below there, I have 22, which is there, and then I have yesterday's low. And there's over an 80% probability we take out either yesterday's high or low. By the way we're leaning, then you got to be thinking about yesterday's low. And it doesn't mean it'll do it. We can have an inside day. So we have to watch these levels. This is trading in fractals, and this is really all there is to it. What it does, how it gets there, that's a whole different can of worms, as they say, because we can't predict it. So what the idea of the Trader Lab is to help traders navigate and adjust to the condition of the market. And the other part about this is it is time frame specific. As a day trader, I'm trying to stay in alignment and trade these rotations because this is where I get paid. Other traders, if they operate in a higher time frame, might just put a trade on and be trading a swing or doing something different. But primarily, this is day trading because there's loads of opportunity and, of course, risk. And if you understand how the market works, you can be getting in alignment. And the idea is not to be always trading. The idea is to be waiting when you recognize the condition of the market. So, resistance, location, shorts, resistance, this is too high, resistance, come back and test, resistance, too high. So this is all shorts. That's all there is going on here at the moment. Shorts, you get below here, which is a target, then, 34-ish, remember ish, then we are going for this and that. And if we can get under there, we have some more targets below. Does that make sense? This is Trader Lab. This is structured trading. Are you guys tracking? If you're in YouTube, how about a like? Smash the like. That would be nice. Also, I got to remind you guys, there is a special going on, end of year deals that are about to expire. One of them expires today. It's 50% off the first month of the MBO package. MBO is the stop and iceberg detector. It's advanced add-on for Bookmap. Very cool. It ends tonight. You just might want to take advantage of that. And the other one ends January 2nd, 30% off if you subscribe to the Global Plus, off 30% off the annual subscription. This only goes to January 2nd. If you've been thinking about Bookmap, for me, if I was going to put my toe in the proverbial order flow water, I'd be taking advantage of that those opportunities. Just me. Just don't want you to miss out. So this suggests shorts, and then it's trade management. Let's look at this. Microstructure, too high. Microstructure, break low. Too high. Watch. Now this is up to you to vet. Microstructure, sellers in control. Sellers are here, break low. This micro is too high, and the volume is right. You could see it if you look to the right. where the cursor is, this becomes your resistance, the high volume node. So what we're going to try to do now is let this rotate to this area and then look for continuation down. Now we'll see if it does it. Now these are not recommendations. This is how you might learn to use the auction for trade management. And nobody knows what it's going to do. Look at the high volume down here. So that's what the high volume sets up the rotation. So this is sellers are here, buyers are here. There was seller absorption here and they got run over. So if this is too low, where's the last place it was too high? It was right here. So what we're going to look for now is potential rotation down, or it's going to push through. So let's see what it does. And these are not recommendations. What we're trying to do here in the Trader Lab for you today is show you market mechanics. How can you use the language of the market in order to interpret what's going on? And again, it's not what will happen. It's what might happen and where. So we know where this might be our resistance in this area. If I can come out a little bit and still do whatever. So there's no prediction. Let's watch. We have a sweep here, which suggests a downside rotation. It can still push higher and come down. This is our resistance. Let's see. And this is our support. Are you guys tracking? You know, I don't call trades in real time because why should you take my stock? But if you understood, you wouldn't be waiting on some indicator. You would know before the fact where something might happen. And that's what Trader Lab is about. Might that give you an edge? Hit the like button in YouTube. Let's watch this here. Still suggesting potentially lower. Remember where our targeting is. What are we looking for? Here, here, and maybe lower. Maybe even out the bottom. I don't know. It doesn't matter to me as a trader. What matters to me is alignment and just managing my trade. Where it ultimately goes, I don't know. The thing that's, as a trader, the rotations are what, at least for me, what I trade. So I try to fit these rotations inside of a higher time frame. I can be still trading, well, I'm not going to trade long at the moment, but let's say that if I get a scenario where I perceive the context has changed, I can turn around and trade longs and turn around and continue short. I prefer to trade one side, so I'll stay with one side. I don't want to be getting short, getting long. It's just too much wear and tear and easier to get out of alignment. So for me, all I have is shorts now. In the morning it was long, so now it's shorts. And this, what's most important I want to share with you at the moment was this, why this was a short. For a continuation trade. If you're in Trader Lab, you would know that. Now, it doesn't mean it would be your trade or even you would take that trade because you have to understand the language of the market. I speak market because I've thrown all the indicators away because they actually were the problem, not the solution. And again, I'm only talking about me. So I don't use any indicators. So how can I do this? How can I be here in real time with you and tell you what I'm going to do and why? Because the language what I think is really important if you're a day trader is to have a plan and to follow it, but only take the trades that have an edge. When the context changes, and this is something we work on in Trader Lab, subject to the fractal or time frame you operate in, then you change. So a lot of us get where, oh, it's got to go up, it can't go any lower. I've never thought that. I should say, I can't remember the last time I thought that, because like everybody, of course I thought that. We've all walked in the same shoes. It's the idea of learning. And then why does something happen and why doesn't it happen? How can we define change? Because the goal is alignment. So this morning, the longs were in alignment for me. I got paid on the longs. It's all fine. When we got below 60, which was that level I pointed out to you at the top of the stream, that's when things change. So once I'm below 60, and I turn the barge around. Now I'm telling you, it's like turning a tanker around. Takes 10 miles. And then I just go from the other side. That's all. That's just, so there's no flip-flopping. It's very easy to overtrade in transitions. I don't do that. I'll just step back. As a day trader, there's so many trades that will show up. I've gotten confident over time, not easily because of FOMO, to wait for the trade. And if it doesn't show up, another one will. That just comes from experience and statistics and knowing that over time there's going to be trades and they're going to come and you're going to take stops on some and, that kind of a thing. Just the way it is. So anyway, short, going for this. And why would we go for that? Well, we didn't get over the naked volume point of control at 80, which was a target coming up, as you guys saw a number of times. We failed up there, and there was over a 70% probability. Hold on a second. Well, giving you some, hold on a second. 67% probability we'd get there, and a almost 68% probability we'd take out the first hour's high. So that's why we're leaning there. And don't forget, previous high or low has almost an 82% probability. Well, what do you think? Are you going to play the 82% probability statistic? That's why I'm short, or would be short if I wasn't streaming, I should say. But that's my short. This is short and the ones above, all which I've narrated here for you. Please give a thumb up in YouTube. Hope you're getting something out of this. James, ask those questions in the Trader Lab. There's loads of support in there. It's a community of traders that support each other, share trade plans, debate everything. Let me tell you, it's a serious community. It's about the business of trading. They can tell you where everything is located. There's 60 PDFs of structured trades you can download that I've shared, that I developed over the years. I've been trading 45 years now. There's also that library of webinars, and there's over 600 of those if you can deal with that. But there is a specific library where I've kind of selected certain ones that I think might, help accelerate the uptake of these processes. I think of trading as process gaming, because that's what trading is. It's nothing more than that. The problem we face as humans is being in a completely random environment that's uncertain 100% of the time. The casinos operate in the same environment. What they do, though, is they're not attached to the outcome of the next hand. The cards are random when they deal them, and the way the gamblers play the cards is random. We're in the same environment. What the next trade that some participant does is random. The algos are random. Everything is random. The inputs are random. So we're in the same thing. So why do the casinos do so well, even though they have no control over the cards coming out of the deck or the gamblers play? Because they only play games that have a statistical edge. That's what the Trader Lab is based on. It's based on gaming theory. Why? It's a proven business model. We're not making this up. We are operating randomly. That I can assure you we are doing. But if we understand how the market works and we can define it, we can then potentially interact with it. Now, remember the possibilities for today. It was get over here, take out the high. No bueno. Break below 60, at least my plan, shorts. And that's what you're seeing now. Shorts to where? Now out the bottom or stay inside. Probabilities are out the bottom because it's an 80% probability. Take out the higher low, and we don't have to. So that's where the short is. That's why I'm sitting short, and that's the plan. You know, it was interesting. We had an interesting conversation. One of our participants, Joe, was talking about higher time frame with a bearish perspective, and I found that very interesting because for me, the time frame I trade in had a bullish perspective up to there, to 80, and then I have to clear 80. So 60 to 80, and Joe was bearish. So I found it interesting because I can understand where Joe's coming from, but as a day trader, I got to trade the levels and the probabilities, which are that way. And then when it fails 60, then I join Joe and I get short. But I can't get short until I get below 60. That's kind of an interesting thing. You know, what's interesting also about trading is everybody defines it in a way that they relate to, and also how they derive and extract the statistical edge. So that's why for me, longs only in the morning, and then now only shorts. So it's interesting. Joe, that was a good job. Are you guys following? How are we doing in YouTube? Please give that thumb up. No, Tom, it's not a half day today. As far as I know. Tomorrow, no trade in the U.S., New Year's Day. By the way, you're all invited to visit the Bookmap Discord Trader Lab community. There is no cost for that. And this is a business of trading. If you're interested in, it's really like a virtual trade desk in many ways. A number of traders sitting. Our senior trader has over 50 years experience. I have 45, trading both professionally, managing money, and then out here with you. I started in 1980, before there were computers or an internet. Probably hard for you to imagine. And no, we did not use an abacus and a stone tablet, but almost. So I started back then. And this is before there was candles. We didn't have PCs, nada. So I did my charts by hand, and day trading was what? It was all position trading back then. So I became a position trader. And this is where we're going now. Okay? And we have to be cautious because if we get rolling under here, the next place is under here. And 93.5 might be an outside target if we take this out. This is the outside edge. This is very important what happens right here. So just keep that on the radar. Right now, the next target is this, over 80% probability. Past performance not indicative of future results. That's based on statistics, and those are also available to you in the Trader Lab, as well as the library of webinars. So let's watch this behavior right here. We're getting a sweep, and often when you have a sweep, we get a counter rotation. So let's just watch it. Now let's go back into trade management. Micro high volume structure. Well, just blew something else up on another screen. Hold on, I gotta fix something now. If I don't have this on the right monitor or screen and I push a button, it creates chaos and damage. Okay, high volume. Actually right there, but that's close enough. What do they say? Horseshoes and hand grenades. Liquidity was in the book here. Break, this becomes potential resistance. You'll see the micro high volume structure. I'm going to put a little line here because what you're seeing when I do this is an auction. Passive sellers are here. Passive buyers are there. The volume is there. If this becomes too high, I leave it. I can come back and test it, which is in here or there. And if it's too high, I leave it. The next high volume cluster, micro, is there. Break low. I come back and check it right there. You see how this might work? Now, where's the volume? It's here. What happens right here? I break low, and what happens here? I test it. Too high, too high. What about here? Too low, too high. Support and resistance. Let's keep watching it. This is a potential trade management process. It's not a recommendation. Some traders are going to keep their stop, somewhere out here. Some are going to put it here. And the closer you run, this says counter rotation, remember? And you're always going to get taken out. So if you're playing a statistic like yesterday's low, you might keep it further away, and then you're going to sit through these rotations. If you know, because you understand order flow, that there's, and I'm going to say in quotes, potential for a counter rotation, you know that right here. And there's your counter rotation. Now you come back here and you look at structure. What was too high? Where is it? Where do you keep your stop? Great question, isn't it? Is it here? Is it here? How far back? How much MFE are you willing to get back to get there and maybe below? I'm asking you the question. Want you to think about it. How would you manage this trade if you were short? Think about it. Because you need the answer before you ask the question. Trader Lab is about trade plan. You do not ask the question here. You have the question answered before you ever put any trade on. You know what you will do. When you're in an emotional state, like you are right now, if you're sitting short, adrenaline, fear, greed, lunacy, running amok because of the endorphins, adrenaline, and all that hormonal stuff going on in your head, you cannot think clearly. So it has to be based on process that has a statistical edge. So you're not doing that kind of thinking, or I should say planning. You're just following a process that you've vetted because you know over time what creates the statistical edge. Not the outcome of this one trade, but the outcome of all of them over a large sample size, a random distribution of outcomes, just like the casinos operate. I said, how far is this thing going to counter rotate and squeeze before it might, underline, because of an 80% probability, take this out? How far back would your plan tell you to keep your trailing stop so you can get here and maybe out the bottom? This is possible. What's your answer? Now, most retail traders don't have an answer because they're making it up as they go. Well, that's not the right answer, guys. The right answer is my stop goes here. If I get taken out, I'm out. And now I'm going to look to put the trade back on, or the context has changed and I'm not putting the trade back on. That's the right answer. Is that your answer? Or do you have, I don't know, as your answer? Hey, Jack91, welcome to the Traders Lab. Thanks for visiting. I think you're going to find this a unique experience. Trader Lab is like a virtual trade desk. It's built on the idea of the business of trading, not the fantasy. I know what we all imagine trading to be, including me, and it took me a long time to learn that I'm not in the business of trying to predict anything. I'm not even in the business of trying to be right because I have no control over that. I am in the business of only interacting when I have a statistical edge. Where's it too high? Well, possibly out here someplace, and I don't know where. So I have to look at my locations. How much am I, and this is what told me the counter rotation was coming. you're listening to the stream right now, you know that I'm anticipating a counter rotation. Now, the problem, and better yet, the challenge is to where? Well, this suggested a counter rotation, and I only got back to here. This is the same process. This suggests a counter rotation, but I only got back to here. This is too high. This is resistance. Yeah, but that's resistance, Tom. Yeah, but so is that. How far back am I going to leave my runner if I'm going for over an 80% probability? You need to know the answer before the first trade goes on. When you walk into trade at the open at RTH, you know where your first trades will show up based on your plan. Just like mine this morning, which was longs between 60 and 80. Not saying it's the best plan, not saying anything. Are you guys tracking? Please give a thumb up if you're visiting in YouTube, and don't forget the end of year deals that Bookmap is offering. 50% off. First month of the MBO package, that's a stops and icebergs. That's what's giving me this. Seeing these actual icebergs, these are tags that come from the CME. I can see stops, icebergs. Very cool. The Global Plus, 30% off the first year. That is amazing. These are all available at bookmap.com. I'm pretty enthusiastic about Bookmap. Why? I've been using it since 2015. I wouldn't trade without it personally. Whether or not you want to use order flow is up to you. I am going to suggest, though, that it's almost like if you're going to be a competitor, you want to use the best tools you can find. And none of us want to pay for anything. I got to tell you, I have a guard dog moth when I open my wallet. But if it can shave a few ticks per day, over how many days per month, is it cost effective? That's all I can tell you. For me, absolutely. And then when I combine that with an understanding of market mechanics, it gives me an edge. This is a business of edge. Can I get more edge with the order flow tool? Absolutely. Now, I can't say that'll work for you because you got to learn how to use it. You know, it's like everything. By the way, if you're a developing retail trader and you're looking for the red light, green light, and now there's going to be an ATM in the basement, I'm going to suggest you rethink that because it doesn't work that way. Otherwise, every retail trader would have ATMs. Everybody would quit their jobs and they'd just become traders. So why is the failure rate so high for retail traders? Because they do the same thing. Why do they do the same thing? Because they don't know what this business is. Algos. Now, can you learn what the business is? I believe so. That's what Trader Lab's built on. The business of trading. How does it work? Why does the market do what it does? How might you get in alignment with it? And you're going to take stops. And you're going to have losing days. And whatever can go wrong will. And the casinos, which this business model is a gaming business, the casinos pay to gamblers. We pay the traders on the other side of our trades. If we have an edge, just like the casinos, even though we pay to gamblers, we're going to extract more from the gamblers than they extract from us. All businesses have costs of production and overhead. Have you ever thought about that? This is not about winning or losing. This is business. You want to be in a business? Then you got to treat it like a business, not a video game. Now, you can treat it like a video game and just play, and that's okay. But I would suggest that's probably not a sustainable way. It's not sustainable. And the failure rate for retail traders is astronomical. Have you ever thought why? And have you also thought that if you're doing the same thing they do, is it realistic to expect a different outcome? I'm just asking. I'm sure you're special and you're different, but the statistics suggest that that's not the path to longevity. It's just, what's the word? Yeah, I was a trader, and yeah, you can't make money trading. Well, I'm going to suggest maybe that's not accurate. But I'm also going to suggest if you do what everybody else does, then maybe it's not realistic to think you'll be an exception. And again, you might be. I can't say. But I've seen enough traders over the years. I've worked with a lot of traders over the years, 45 years of trading. And I've been through everything you've been through. And my beliefs were defective. The problem I had, and you too, is you get winning trades if you have no process. So when you have winning trades, you think that it's just let's make it better. And I did a video on it, or a webinar called Trader Groundhog Day. That's when you keep waking up doing the same thing, expecting a different outcome. But because it's successful at times, in other words, you could become profitable for 4 or 5 whatever it is, week, whatever, and then it all goes kaput. Why? Because you don't have an edge. It's just a random distribution. And we mistake this random output as something that can be fixed and made better. Human nature again. Well, if it doesn't have an edge, then it's not going to happen. So you're going to keep chasing something that is really, it's like an illusion over the horizon. You just can't quite get to it. That's what happens to most retail traders. Has that happened to you, or is it happening to you? If it is, use the link in the bottom of YouTube, come to Trader Lab. It might change how you look at things. I can't say it'll change your outcome because there's work to be done. But I believe you're going to find something very different in the Trader Lab. And certainly different than what's out there in the in YouTube or internet world. It's different. So you're invited. And currently there's no cost for the Trader Lab. I can't say that'll continue. I can't even say the Trader Lab will continue. But I can say that while it's still here, you might want to take advantage of it. And then do what you may with that information. Maybe you'll make things better and you'll share. The idea is that we leverage in the Trader Lab our collective experience to create something better. It's not about me at all. I'm just somebody who's been there, done that. And with 45 years, maybe that information that I share can accelerate your learning curve. Take advantage of mine. You guys are exposed to all kinds of nonsense, and if you can get very easily distracted and also do chat room and guru hopping and never end up anywhere except running out of time and running out of dollars. If you come to Trader Lab, I can't say you'll be successful, but I think you're going to get a different perspective, not only from me, but the other traders that are there. It's the leverage of the community. Please give a thumb up in YouTube. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants for screenshots to reverse engineer, to build a library of structured trades, to understand context, to understand why 60 and 80 were key numbers for today. 60 and 80. Can't get above 80 and you break below 60, south of the border. Early in the morning, we came down to 60. We came up to 80. Long side trades looking for this. No bueno. Short side trades looking for that. Okay? That's the plan. Now, what happens in between happens. Almost they say what happens in Vegas stays in Vegas. Well, this is trading. And nobody can predict. So it's not about being right. If the casinos could predict the outcome of any hand or how gamblers would play, I think they'd skip the ones where they pay the gamblers. But they don't. They pay the gamblers. And over time, they extract the dollars from the participants. I mean, look at this. Now, there's our sweep, remember? That said, coming back. Now, There's resistance coming back. Support down here. Can't get down here. That's it. There's nothing more to it. No prediction. Just maybe. I have to show you this again because I don't want you guys to miss out. This is something that it's pretty important. Then I have some final closing remarks for you guys. 50% off the MBO bundle that stops in icebergs. It's a high tier tool. Uses the market by order data that's disseminated by CME. Tells you what's a stop, what's an iceberg. Lets you see inside the order flow. Makes it very granular. 30% off. This ends January 2nd. That's for the annual subscription. For the Global Plus, that's everything but the kitchen sink. If you want the kitchen sink, get the MBO bundle with it. Or start with this. You can add the MBO bundle, but you can save 50% right now on the first month of the MBO bundle. And it's month to month, so you can try it and save some dollars, get your hands on it and see how you might use it. There's tons of education on how to use these tools, and you have to invest time, and the Trader Lab can help you with that, plus all the additional education. And there's a lot of additional education available at no cost, not only the Trader Lab, but you can learn large cap, small cap stocks, options, crypto, of course, order flow with a high tier tool like Bookmap, market maker behavior, algorithmic behavior, and a lot more. The thing is, find what speaks to you, keep it simple, quantify it, make it process driven so it is consistent, and then extract metrics. We as human beings are buffeted by our emotional states. When something is completely uncertain 100% of the time, how do you operate in that without being triggered, fight and flight and all that? It's because if you have statistics, you've made something nebulous and random tangible. So if you know there's an 80% probability that you're going to take out either yesterday's high or low, and we don't have to, remember it's not 100%, wouldn't you be trading towards this? If you know that, even though you don't know how or if we'll ever get there, you can then be oriented looking for continuation trades at locations that you have vetted. And if you're using a trade management process, and we discussed right here in the stream that we could get a counter rotation right here. Now, the thing is, to where? No way to know. But you have a trade management process, you'd be taken out of the short, and then you'd be looking, as long as the structure stays intact, and we have other locations here, there, here, and out here, to potentially be looking to put the trade back on, to come back here and maybe come under here. Not a recommendation. That's what you know. Anyway, guys, appreciate you being part of Trader Lab and visiting us on YouTube. Please give a thumb up. The other thing is, I want to thank you all for your support and participation in 2024. Thank you to all the Trader Lab participants. Those of you who've been visiting Trader Lab, who are either in the Trader Lab community or have been visiting here in YouTube. Remember, there's a link in the bottom of YouTube. You want to access the Trader Lab and all the resources in the Bookmap community. You're all welcome. There's no cost. Also, I'm looking forward to 2025. By the way, this is called VPOC Migration. This is an important event. We want to watch right here for continuation trade lower. It's not a trade recommendation. I'm out of time. So happy New Year, everybody. Be safe, stay safe. I am looking for continuation shorts at the moment. We'll see what happens. We have a high probability of taking this out, and we always have to be aware of possibilities. And that's all you have. Please give the thumb up. And don't forget, the specials expire. If you're interested in taking advantage of the discount for the global annual Global Plus, that should not be missed. It expires January 2nd. And today, the MBO bundle, 50% off the first month, expires today. If you've ever wanted to get your hands on Bookmap, it's a great time to do it. Thanks again, guys. Please give that thumb up. And remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer the structured trades. Use the downloads of the 60 PDFs of structured trades I have shared in the Trader Lab. Also, the library of webinars is available exclusively to Bookmap Discord Trader Lab participants. Happy New Year, everybody. Be safe, and I look forward to seeing you, not tomorrow, but the day after. Have a great New Year's, and thanks again for being part of the Trader Lab. See you soon.